Have you ever looked at a stock chart and just felt completely lost? It doesn't matter if it's stocks, crypto, or Forex. All those little green and red bars are actually telling a story. And today, you're going to learn how to read it. Let's dive right in. So take a look at this. Does this look like a foreign language to you? Well, don't worry because you're in the right place. By the end of this quick guide, you'll actually have the skills you need to start making sense of what these charts are trying to tell you. All right, so if we're going to learn the language of the market, we have to start with the most basic piece, right? The absolute fundamental building block, and that's the single candlestick. At its heart, that's really all a candlestick is. It's just a super simple visual snapshot of what a price did over a certain amount of time. That could be 1 minute, it could be an hour, or even a whole day. It's just a little picture of the market's action. Okay. So let's actually break that little snapshot down, because every single one of these candles, no matter how tiny it looks, is packed with four. That's right, four crucial pieces of information. Let's dig in. So every candle tells you this four-part story. First, you've got the open. That's the price right at the beginning of our time period. Then you've got the close, which is where the price ended up. Then there's the high, the absolute peak it hit, and the low, the lowest point it dropped to. These four data points are what create the shape of every single candlestick you see. And the color? Well, that tells you the direction of the story. If a candle is green, it means the price closed higher than it opened. The price went up. We call this bullish. Think of a bull thrusting its horns up. Now, if it's red, that means the price closed lower than it opened. We call this bearish, like a bear swiping its claws down. See? Pretty simple, right? Okay, so we've learned the letters of the alphabet. Now it's time to start forming some words, maybe even a few phrases. We're going to move on from just looking at a single candle to seeing how groups of them create patterns. Patterns that tell a much deeper story about what's really going on in the market. Our very first pattern is called the Doji. Now, you can spot this one pretty easily because it usually looks like a little cross or a plus sign. And its main feature, what makes it a doji, is that the opening price and the closing price are almost exactly the same. That's why the body is so tiny. So what's the story a doji is telling us? Well, it's all about a tug of war. A doji represents a moment of pure indecision in the market. The buyers and the sellers, they fought each other to a complete standstill, a total draw. And this stalemate, it's a really big deal. It often means that whatever trend was happening is running out of steam, and a change in direction could be right around the corner. Next up, let's talk about the hammer. And for this one, context is everything. The hammer pattern is really only significant when you find it after the price has been falling for a while, at the end of what we call a downtrend. The hammer tells a story of a really dramatic comeback. Imagine this. The sellers were in complete control, pushing the price way, way down. That's what creates that long lower shadow or wick. But then, out of nowhere, the buyers stormed back in and drove the price all the way back up to close near the top. It's a huge victory for the buyers, and it's a strong sign that the downtrend could be over. Okay, our third pattern is basically the polar opposite of the hammer. It's called the shooting star. And as you might guess, you'll usually find this one at the end of an uptrend after prices have been climbing for a bit. So the shooting star tells the exact opposite story. In this case, the buyers tried to keep pushing the price up to keep the good times rolling, but they failed. They ran out of gas, and the sellers stepped in with serious force, slamming the price all the way back down. It's a major sign of weakness from the buyers, and it hints that the market might be about to head lower. So let's just put these two side by side for a second, because it really makes it clear. Remember, the hammer shows up after a fall, in a downtrend, and it suggests prices might be about to go up. The shooting star appears after a rise, in an uptrend, and it signals prices might be about to go down. They're basically perfect mirror images of each other, telling opposite stories about who's winning the fight. Wow, okay, we have covered a lot of ground here. So let's pull all of this together into a simple, quick reference guide that you can use anytime you're looking at a chart. Here it is, your cheat sheet. Just remember the three stories. The doji is the story of a tie, total indecision. The hammer is the comeback story you find at the bottom, signaling a potential move up. And the shooting star is that story of a failed rally you see at the top, signaling a potential move down. Keep this handy, it'll help for sure. And that's it. Seriously, you've just learned the absolute fundamentals. Think about it like this. You now know the basic alphabet of these charts. You can officially look at any chart and start to piece together the stories of indecision, struggle, and victory that are hidden inside every single candle. So the next time you pull up a chart, I want you to do something different. Don't just see a bunch of random lines and colors. Look for the patterns, try to understand the little battles they represent, and then ask yourself this one question. What stories are these charts going to tell you?